Well, hello there, boys and girls. Thought you weren't gonna see me again, huh? It's been a minute. Lola Clear here on Webull. It's a paper trading platform that I use to show you my strategies and just give you some hints as to, what you can do to make profit and help you get out of that rut you might be in. So I have been in OSTK from $42, and that's part of the reason why I haven't been on here, because I've never held a stock this long. Today this stock hit 128, took some, but I was a nervous wreck because, like I said, I've never held a stock so long. You all know me as a day trader, but I just had a feeling about this stock and I just decided to hold it, and I put all my family members as well. I told them to get in it. They've been trading on their own as well, and they've been making money too. So I was nervous, not only for me, but because it's the first time I'm actually telling someone to do something. All right, had to pause there for a minute. My phone rang. All right, so guys, yeah, I was in this stock. I don't even remember where I was. I can't rewind on my recording here until I'm done, but whatever I was saying, I don't know. But I've never held a stock so long, and they said pigs get slaughtered, so I was just having that in the back of my mind. And yeah, I took some off, so I'm not 100% nervous anymore, so now I can come on and give you guys some hints and some information. So I'm gonna do this today. I'm going to talk about 5 things, and there's a lot more. I might come on again and give you some more, but for today we're going to do 5 things that I wish someone had told me when I started trading, like within the first month of when I started trading. And I hope this reaches a lot of people who are just starting out, or who just need reminding, or who did not know this about these things. So first of all, I'm going to talk about the PDT rule. So you might have heard about the PDT rule. So the PDT rule means a pattern day trader, PDT. If you're a pattern day trader, that means you have less than $25,000 in equity to trade with it, at your brokerage company. So if you have less than $25,000, you are restricted by law to only trade 3-day trades per 5-day period. Now, a day trade is when you buy a stock and sell a stock within the same day. If you buy a stock and sells it the next day, that is not a day trade. That does not count against you. If you buy 100 shares and sells 50, keeping 50 more, you cannot sell that within the same day. That is going to count as a pattern day trade. If you buy 50 and then buy 50 more, that does not count because you're only buying. So if you buy twice and sell once, that's a day trade. But if you sell it the next day, no matter how many, you can buy as much times as you want. You can buy 10, then 10 more, then 10 more, then 10 more, then 10 more. You can buy as much. But if you sell even 1 share out of all of that, it counts as a day trade. If you have shares and then you swing it, means you carry it the next day or next 2 days or wherever, then you can sell multiple times as long as you don't buy within the same day. And I hope that explains it. But yeah, that's basically what it is. As long as you don't buy and sell within the same day, you're good. But if you do, that counts. All right, so the next thing I want to talk about is spread. Now, you might have noticed that sometimes when you buy shares, you automatically start seeing in your P&L a negative figure. That is because there's a difference between the buy price versus the sell price, or the bid versus the offer. Let me show you what I'm talking about. All right, so let's look at this one. So EAT, one of my favorite stocks, you all know that. The bid is $25.65, while the ask is $25.67. So therefore the spread would be 2 cents. So for every share you buy, you're gonna have to fill that 2 cents difference. Here's another example. The bid is $16.95, while the ask is $16.96. There's a 1 cent difference. So therefore, for every share that you buy, you're gonna have to fill that 1 cent difference. So like I said, this is the bid, this is the ask, these are the buyers, these are the sellers. And here's another one. The bid, $2.42, the ask, $2.43. There's a 1 cent difference. Now, you notice in my 3 examples, I do not buy shares where the ask is far greater than the bid, because then you're going to have a big negative going into the trade, and you're going to have to cover that plus cover commission and fees before you start making profit. And there are times when that stock will not give you that difference. It would not go up that much. So I usually go for stocks 2 cents difference or cent difference. It's very rare that I'll go in up to 3 or 4 cents difference, because I do not want to have to cover all of that before making profit. I hope I'm explaining this. Let me know if I'm not, but yeah, when you're purchasing your shares, just look and make sure that these are as close as possible, because then you can be in trouble to try to cover all that negative before getting into positive or getting into green. The next thing I want to talk about is having patience. Now, I want to show you guys something. Look at OSTK. I had it on the screen, just for example's sake. All right, so, we always go in and we always put in our fib lines. That's a little too bright. Ooh, okay. All right, that's a little more tame. Now, what I do, and it's a good practice, is to wait for the market to level itself out after the bell as much as possible. So after 9:30, don't just jump into a stock. Wait for it, because there's a lot of orders going through at 9:30, and it's not, how would you say, it's not evident yet who's the winner of this trade that you're in. For example, here we have 9:30 right here, and the stock popped up, came back down, pop up, came back down. So you see, if you are in it and you see the stock pop up here, let's say you jump in at 9:30, and then the stock pops up and you're thinking, oh, it's gonna keep going, but then you see this red candle, you see this pullback candle here, and then this green, and then red here, you're gonna be like, oh my God, it's gonna go down. You might jump out as a beginner trader. Or you may even hold, and then you see this pop up here, then there's a double top, and you're thinking, oh my gosh, what's gonna happen? And you see a big red candle, then you see another candle under here. You might jump out thinking this stock is gonna go down. You're not sure yet what's happening. Other traders, more advanced traders, can be watching this VWAP, and it's trending along this VWAP. So yes, you can hold. But for beginner traders, you're seeing these up and down, you might get scared and jump out. But if you had only hold for a while until you see a breakout candle like this, then you would know we're going on the upside, or you're watching to see how the stock plays with VWAP, which is this line here, and then you can be sure as to what to do. So you have to wait for the stock to level itself out in want for a better word. And this happened at 9:44. Then we saw the big candle here. It has been trending on VWAP. You take your trade all the way to the upside. Let's see if we can find another example. Let's look at VSLR. That's another stock I've been watching. And I just wanted to show you, there are better examples here, but I'm just looking at the ones that I was actually, had on my screen. Now, beginner trader again, it's 9:33, stock is pouncing up. You might think, oh yeah, you jump in and then boom, it starts dropping and you come out. If you had gone in below, you might have made break even, or you might get a profit, but then you think, okay, this stock is dropping, but then you out and then it pops up and then you're like, oh my God, and you get in and then it drops and then it consolidates for a while. But then it levels out here at 9:56. And you can note that VWAP, while you sit and wait, you can see that VWAP is trending up. It's consolidated for a while. Then there's a big bullish candle here at 9:55, this one here. Then it hit a very unconvincing pullback and then boom to the upside. So if you had waited, you could have gotten somewhere here at 25.98 and got it all the way up to $26.30. Let's see if we can find another one so I can just, show you what I'm talking about or give you a better example. All right, here's KIRK. Look at this one again. So this one at 9:32 broke out, consolidated from 9:35 all the way to 10:05, and then it made its move. So you see, you can just sit and wait and watch how it relates to VWAP, what happens after the consolidation, because then you're going to sit to see who is actually the winner. So the winner obviously were the bulls. Nice breakout, big bullish candle here, not a convincing pullback, and then all the way to the upside. So if you had waited until you see this break this, break this upper line here, you see it hit on it, then they break it, came back, bounced off, you could have got in here at 10.19 and then take it all the way up to $11.99 or even $12 right there. A nice profit. Now I didn't trade this, I just saw this on my scanner and I thought I'd just show you. So, but before you do that, remember you always have to put in your Fibonacci line and make sure your VWAP is there, and also your support and resistance. So if you didn't see this right here, you only have this. Remember, you have to look in your past to know your future. Here is a nice support resistance right there. All right, let me just hide that. All right, so there's a nice support resistance. Why? Resistance, support, resistance, resistance, support, 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 resistance, support, resistance, all the way across, resistance, resistance. So if you had seen this and you saw the potential for this stock to move when it broke out, you're watching it, it consolidated for a while, had that big bullish candle here that we just saw, you know that it was a possibility for it to get up to here, 1172, and it broke it, came back down, because a lot of people are thinking what you're thinking, because it's going to get to 1172. It dropped and then went back up, and it's still going up, but you would have gotten a nice profit from down here all the way to here just by waiting and holding to see who is the winner of this trade before you get in. So don't rush in. Yes, a lot of people might have made profit here, but then, you know, you might not have. Right? So the best thing to do is just be patient and wait. All right, so the next thing I'm going to talk about is when to get in and when to get out of a trade. I talk about that on many videos before, but you know, I'll just touch on it again. So like I said, you could have put in your support resistance line based on your support and resistance from the past. So that would be one of your exits. Or if you had drawn your daily Fibonacci line, it would have looked like what we have right here. So then you would have gotten out on your fib line, which would be here, or you can hold it until it gets up to there. Who knows? Because it looks like it's actually going to go. If after the stock has gone up and you wanted to trade it down, say it's shortable, you could put in your Fibonacci lines from the bottom all the way to the top, and then you have where you can exit. So there's a fib line right here, and it was VWAP was getting up to it. You know, if you're shorting it, this would be a level to get out at. Let's use a better example. Let's go to EAT, back to EAT. All right, so I have my lines set on EAT already, you know, from the lowest to the highest. And as you can see that if you were all the way up here and you wanted to short EAT, this would be an exit point. This would be an exit point. This would be an exit point, because why? Your Fibonacci lines are there. Also, exit points can be gotten by looking on VWAP. So VWAP also is where a lot of traders use to enter and exit trades. So that will be a good exit point for you as well. So you would enter on a fib line and exit on a fib line, because here we are. If we had entered here, we could exit here. If we entered here, we could exit here, or here, or here, or even here on the daily fib line. So knowing where to enter and exit a trade based solely for me on my technical analysis. I go off what this says because it's way smarter than I am. So I would just go in where it hits on that, or hits on VWAP, or even support and resistance. But in this case, I don't even have to draw the support and resistance, because the fib line actually is cutting right in the middle of it. Next thing I want to point out is finding the right scanner. Now there's tons and tons of scanners out there, but for me, And I've talked about this before. I use Finviz, and just let me just show you a few of the things that I have there. So I use Finviz, like I said, and I have the elite version, so I don't have all that commercial going on, and I have no delays. So what I have set up here, I used to look at all these top gainers and stuff, and it's very good. I mean, you can look at it, but usually in the mornings, they've already ran. So I don't look at it unless I'm going to short something and it is shortable, and I can go in and I can, you know, get my setup or watch the setup and see what happens. But there are screeners that you can set, and I'll just go over some of mine. One of my favorite that I use is a PE ratio, and you can just take it as given. If you notice, all these stocks that have PE ratio, under my PE ratio, have done some massive moves, and they actually move even after, way after market open. So it's not just a big pop right here. Let me just take that all the way down. So from 10 o'clock here, this stock moved from 509 all the way up to 561. Nice move on that one. I think I'm still in there. Yeah, I'm probably still in there, but yeah. Because, let me see, I think I have my exit set right here at 572. So I'm holding on till 572. But anyway, all right, so back to screener. And I'm not in this one because I don't like this. But you can see the movements here. This actually moved from, well, it popped pre-market basically. So this wasn't a good one, and that's why I said I'm not in it. But nonetheless, it popped, came back down from 1927 all the way to 1964. So if you have a large amount of shares, you could get a nice profit on that one. But like I said, I'm not in it. And the way I have it set, I am not a penny stock trader. I don't know. It's just not for me. So I have my price set at $5 to $20. And with the elite version, you can do that because you have what they call a custom set. So you can set it custom, or you can get it 5 to 20. That's what I have right here. I have my PE ratio set over 5 because that's my golden line right there. I have a forward PE ratio, same over 5. I like my stock to have changed. I want to see them, as long as they're past 5%, going all the way up. My relative volume, as usual, is over 2. And that gives me quite a bit to look at, and gives me the best ones. You can take that down if you want. Low float I volume is not one that I really look at, but I like to, whenever I feel like shorting, then I look at something like that. The next one that I like is shares outstanding, because these usually run as well. If you can see this stock here, let me go all the way down to 5-minute chart. Yeah, at 10 o'clock, this ran from $11.94 all the way to $14.83. So that's one of the reasons why I like this one. Shares outstanding. Let's look at this one. Yeah, at what's that? Let me go into interactive. At 9:30, it popped up from 9:30 to from $5.15 all the way to $5.74. Came back down and is trending up. and went all the way to, well, it hit 3 times, and this is a nice flag pattern here, drop down, consolidating. I'm thinking this is going to go much higher. Let me take a note of that one. That looks like a trade. It's making one of my patterns. You can see that, right? And I'll watch it to see if this is the drop and pop pattern that I like. It's looking quite strong, so I'll be watching that one. All right, so this is how I set it again. My $5 to $20, relative volume over 2, 1 shares outstanding under 10 million, current volume over 200,000, and float under 10 million. So that would give me a nice one to do. Let me see the next one. Did I do relative volume? Relative volume is another one that I like. And what I do, I just scan through whenever I see them anyway and see if I can find anything that matches my pattern, or if I see a major support resistance above where the stock is at, and then I just watch it and make my move when the right time comes. Here's another nice one. See, at 10:05 is when this stock started breaking out. You know, it's going up, then, you know, some people might think, oh, it's going to keep going up, but then it plummets down, and then they might jump out or whatever. So if you just wait, then you can see what happens. So at 10:05 a.m., this thing just went from $11.89 all the way up to $14.84. I think we went on this already. Hey, ignore me. All right, so that's basically what I do. I have strong buy, top gainers, multiple bottom, Mariposa black, Mariposa white, small cap. But you can go through here and you can select all the criteria that you like, and it will give you the stock that matches those criteria, and you'll be good. I even have one here that's earnings, and I have it set for, you know, companies having earnings today, today after market, today before market, tomorrow, and that will give me stocks to watch to see if, you know, they're worth trading. All right, so that is basically what I want to talk with you about. If you like this video, you have any questions about this video, let me know. Give me a thumbs up, please, if you like it, and try to get on Webull. And if you're going to do that, check out my link below, and you can get a free stock if you sign up. And you know, it's pretty good. They give you good stocks, so it's very good. I have my website there. I usually upload my latest videos there. I have some articles there that you can read, and you know, just fun stuff. All right, so please like, and if you haven't subscribed before, please go ahead and subscribe. I try to come out as often as I can and show you some of the trades that I have. There are other trades and other videos there. Go ahead and just click on those just to see how I trade. And I only do live trades, and I don't like to talk about trades that you don't see. But what I can do tomorrow's Thursday, yeah, I might come on and do a trade now that I'm not a nervous wreck watching OSDK. I'll come on and show you some more strategies and trades and how best to get in and get out, which is basically what I just talked about today. So all right, guys, again, like this video, please give it a thumbs up, and I will check with you later. Take care, guys. Bye.